Hi everyone, I'm going to get started now. All right, so my name is Anna and we are Epic Events, the organizer of today's cannabis industry event. Epic is an e-commerce website for frontier technology products and events. Frontier tech includes AR, AI, blockchain, robotics, and other bleeding edge industries. Cannabis is our latest addition, and this is our first event in the space. We're excited for more in the future, so stay tuned. Before starting the panel, I'd like to cover virtual networking, which is after the panel. It does require a different link by meetaway.com. So it's not Zoom, it's a different link from this one. So you have to look for it in the Google Calendar invite or the message that we sent to you through Eventbrite. And to match with people you want, you have to go ahead and fill out your profile. I recommend that at a minimum, you include your LinkedIn profile. So yeah, on with the show. I'd like to introduce Jason Kornfeld, who is our moderator for today. Jason is of counsel at Mayfield Venture Law, specializing in the representation of startups and emerging growth companies through various stages of their life cycle, including corporate formation, structuring and governance matters, commercial transactions, venture capital financings, and M&A. He represents many startups across industries with a special focus on cannabis. Previously, Jason worked at Atrium, and before that in the San Francisco office of Covington and Burling. So Jason, you can take it from here.
Thanks for the introduction, Anna. So today would like to start off with just sort of a simple question with each of the panelists. Could you please introduce yourselves, talk a little bit about your firm or your company, maybe add your investment thesis, any cool companies you've worked with, or recent investments you've done, and then we'll dive right into sort of the various questions for the topics today, which will range from sort of how COVID has affected the industry from an investment and growth, raising money in the space, and from a legislative perspective, and then end with some final thoughts. So Troy, do you want to kick it off? I think you're muted.
There we go. All right. Thanks for having us. So I'm Troy Dayton. I am the co-founder and chief strategy officer at the ArcView Group. I also serve as chair of the board of the Marijuana Policy Project and founding board member of National Cannabis Industry Association and a couple other things. We're the ArcView. We're the first and largest collection group of high net worth investors in the cannabis sector, and as a group have invested more than $275 million in over 215 cannabis companies to date that we know about. So a good portion of the companies that have kind of come through the cannabis industry have come through our group to raise money. And our basic thesis is that you go further together, right? That investment decisions and deal sourcing are really best. You make the best decisions when you're tapping a wide range of people's insight about the specifics of the verticals. And also when you're together, investing together, you're able to get better deals. And also companies tend to do better because they have a big kind of a group behind them. So we've got a bunch of different ways that investors and companies can work together to invest and to raise capital. And yeah, I'll pause there. We'll talk more about all this other crazy stuff that's going on.
Cool. Sherry, you want to go next?
Sure, I'll jump in. I'm Sherry Haskell. I'm the CEO of Canna Angels. We are in our 4th year now. A little bit about my background. I've got very strong background in the financial arena. I've got several securities licenses and owned and managed my own hedge fund back in the day, and have been involved in private equity and investment banking in a number of different vehicles, financial vehicles. entered the cannabis space about 4 years ago. We are an angel investment consortium. Our investment thesis actually is that we have a very strong dedication to the technology plays within the industry. We have focused quite a bit on them. I would say about 80% of the portfolio is technology basis, and that could include agri-tech, biotech, data tech, compliance tech, lab tech, you name it. And we believe that those are the real infrastructure plays that are sustainable and very nicely scalable. And so we've done really well with them. We've had 5 exits in less than 3 years. And we do a lot of educating for both sides of the table, for both the entrepreneurs and the investors. So that's about it from us right now. We've got 52 killer companies in the portfolio.
Awesome. Thank you. Michael, you want to go next? And then Jeff, you can follow.
Sure. I am Michael Bonello. I'm with Poseidon Asset Management. We are a investment firm 100% focused on the cannabis industry and have been since 2013. Currently running 2 funds. Our first fund we launched in January 1 of 14 alongside of the Colorado market opening up, and launched our second fund in late 2018, and I actually just closed the fund yesterday after a successful raise, which we're excited about. As far as our investments, we touch both plant touching and non-plant touching. I want to say it's about 50-50. We originally started off focused on ancillary only, and then got into plant touching in 2015. But we believe that this is a multi-billion-dollar agricultural and retail industry that is still building out an infrastructure that's very fragmented. And to Sherry's point, I think there's a lot to do on the technology side and a lot of solutions there. So some of our notable investments over the years, we've invested in GTI, Ascend Wellness, Spark, Northern California, on the plant touching side, and on the ancillary tech side, Flow Hub, Headset, and Pax Labs. So I'll leave it there.
Thanks. Jeff.
There you go. Well, thank you, certainly all of you, for the invitation. So where should I start? We're clearly at the opposite extreme end of where Troy, Michael, and Sherry are. Cannabis is a newly formed, newly launched advisory services firm, a little less than 3 months in. And our focus is on delivering regenerative growth for all in the cannabis industry using the UN's Sustainable Development Goals, the SDGs, as the framework to deliver multi-capital transformative solutions to many of the world's biggest challenges. And we see the cannabis industry and the various sectors within the industry as being very fertile ground for that. One of the areas of focus for us in terms of a fund which is currently being built out, Fund 1, will be to ensure that there is positive environmental and social impact whilst still delivering an economic upside for all stakeholders, not just shareholders. So in essence, we term this impact alpha for all stakeholders. Of course, every fund is seeking alpha, but we're actually seeking impact alpha. So there'll be some, as I say, environmental and social impact upside to any investment. We're, to say, very new and just still building out Fund 1. But our investment thesis will largely be to focus on those scale-ups and startups in the cannabis industry that are clearly showing alignment to the Sustainable Development Goals, and they're clearly delivering some environmental upside and some social upside. At the same time, we'll also be looking at technology companies that can have a profound impact in the cannabis industry. So looking at technology players that are looking at nanotechnology for water filtration, and the like. So that's some areas. We're also, when we look at our investment thesis, we're also looking at, of course, at our impact thesis too, and we're very, as I say, aligned to the UN Sustainable Development Goals.
Great, thank you everybody for those introductions. They're fantastic. So let's jump right in. Looking back at sort of coming into 2020, obviously nobody could have really foreseen COVID happening. What were your general sort of predictions for the industry at the end of 2019 coming into 2020.
Shall I take that?
Who wants to take that first?
I'll take it. Okay.
Sure.
It's interesting because I did a presentation to an investor group at the beginning of February, and I pulled that up today to see what I was predicting at that time. It's very interesting because it's not all that different from what I'm looking at right now, but some of those indicators were ag technology, anything that's an efficiency builder, technology sophistication, big data, compliance platforms, authentication, and nanotechnologies, as Jeff mentioned, and biotech and synthetics. Those were some of the things that we were really looking at the time. And logistics integration, which is even more important right now.
Thanks.
So a couple things. One, we were looking at the idea that intellectual property in all its various forms becomes more important over the long haul. And also that we're expecting a lot of companies to be running out of capital, particularly in California, with the environment being the way it is and with the way that the availability of capital really started to dry up in a lot of ways towards the latter half of last year and into this year, that there would be a lot of opportunities for distressed asset plays, and that cash was going to be king, that we're going to need to have the companies that have money in the bank are really going to be at a huge advantage over those that need to raise, or those that are companies that are profitable, of course, are going to have an advantage over those that are not, more so than they ever have before. All of that has been now heading into what's happened since has really just, put like huge exclamation points on those points that we were looking at heading into 2020. But it's also important to note that we, put out market reports showing that sales are just like a straight line up. We're looking at, a 23% compound annual growth rate over the next 5 years. So when you have declining valuations and increasing market, that's a good buying sign, as long as your money isn't the money that's going to help close the company down, right? So just making sure people have enough cash to move forward. So that was kind of what we were looking at going into it, and again, more so now than we were in the beginning.
Sounds good.
Yeah, I'll jump in. We kind of had a very bearish view of at least the first half of 2020 going into 19. We actually wrote a white paper at the end of last year talking about the cannabis cycles and where we thought we currently are. And we felt like we were in a phase that we coined the term the Darwin phase, where it was going to be the survival of the fittest, exactly for some of the points that have been made. Troy was talking about cash and the fact that this industry has been in a cash crunch for at least in the last 9 months. When you look at the global cannabis stock index, it was down 34% last year. If you look at it from March to the end of last year, it was down a lot more. And if you look at it from January of 18 to March of this year, it was down 85% at the low. So there's a lot of pain in the industry, and it had to do with a couple of reasons. I think there was a very slow-moving regulatory environment. I think a lot of companies made some bets on what the regulations would look like and the timeline of those regulations. And then there was a pathway to profitability that was difficult to find, and a lot of companies weren't able to live up to their pro forma financials and live up to the valuations that they had in previous rounds, which makes it very difficult to go out and find future capital when you have to possibly take a down round. And obviously around all that is the cash burn and a lot of expansion. And I think without figuring out how to make your core business profitable, a lot of companies were expanding over state lines and not doing it in a prudent fashion. And there was a point in time in cannabis that I feel like money was almost growing on trees. Companies were getting rounds of financing done without a problem. And now that has ceased, the environment has completely changed, and the well-capitalized companies and good operators, I think, are going to make it through this. And we thought 2020 was going to be the year that you really saw the long-term leaders emerge in the industry, very similar to maybe the mid-2000s were for tech. We did not anticipate a pandemic. I think that's just accelerating that. But it is definitely the survival of the fittest mode right now.
Thanks.
Yeah, I think I would only add that, of course, if bearing in mind that Patrick, my partner and co-founder, as we were going into thinking of our fund, I think it's safe to say that we would not have changed our mindset in terms of our investment thesis or our impact focus. I think, if anything, what we're currently going through in terms of this externality has really only sharpened our focus. I think it's important, I guess, to just point out that our fund is really going to behave like an impact investment fund, and in all likelihood, our limited partners who will join us in the fund will be family offices. And I don't know that the family offices that we are speaking with are really going to be that impacted by such an externality. In fact, they still are pretty determined to utilize the funds and the wealth that they have in the areas of delivering to the Sustainable Development Goals. I think, if anything, as I said, it just sharpens our focus and sharpens the focus of what we wish to do with the fund.
You know, if I can add to that a little bit, especially on what Troy had mentioned, the capital markets, and particularly when we talk about capital markets, we primarily talk about the public markets. And the public markets have had a very negative impression on the entire industry. But that's because a lot of the companies were attracted to the capital that was available to them on the CSS in Canada. We never wanted any of our companies to prematurely go public. It's the kiss of death, but they don't know that when they're young companies. And now I feel that a lot of our companies really are sustaining quite nicely because they learned how to maintain lean and trim and to be efficient. And because they were the technologies, they're hanging in there. They're doing well. I've been reaching out to a number of our companies during the last week just to touch base and see. And I'm amazed to hear that some of them are at capacity right now and trying to figure out how to bring in more capital so that they can expand. But those are, you know, the smaller technology companies that are holding up the rest of the boat.
That's a good point, Sherry. So, I mean, my next question was mostly going to be like, you know, how did COVID sort of change your thesis and outlook for the year? But it sounds like sort of everybody's kind of remaining unchanged, that really this is potentially, if anything, just going to accelerate who's going to become the space leaders in each sector within cannabis, and might present, you know, more investment, you know, opportunities for you all as investors that you would not have seen as soon. But other than that, you know, you're holding strong as to likely, you know, what sectors are going to matter the most this year versus not.
Some of the things that we didn't find so sexy in the last year or two, like the logistics plays, the distribution companies, I mean, we're really looking at them now, especially when they have solid platforms and they have strong systems and they can scale up quickly. They've moved up in position.
Just out of curiosity, what's everybody's thought sort of on the California distribution market and sort of how that's going to play out? Because I feel like a lot of investors for the last year have been saying, oh, we don't want to put a ton of money behind this yet. And I know, you know, there's, for example, there's certain distribution companies that have raised some large rounds, but it seems like I haven't really seen that consolidation yet between anybody and sort of how that's going to play out. I don't know if anybody has sort of an opinion on where that situation is likely to go.
That's the key word, is consolidation. I think that's what we're going to be looking for. I think M&A is going to be really strong at the end of this year.
I also think that,
I would agree with that.
I also think that, you know, given that cannabis has now been sort of deemed essential in California, but also in a lot of other places, and also people love to consume cannabis at home. Like, people being at home is going to allow them to consume more cannabis. I mean, you know, that's just going to be, they're doing less of other things. And so I think that it's going to really totally change delivery. I mean, I think curbside pickup is going to become a thing in the future. All these things that are happening right now, I mean, this may have saved companies like Ease. We're like really having a tough time, and boom, now it's really sparked up. And so that's also then that if that's happening, then that's going to be trickling down to the brands, because people are buying these brands now. The brands who are about almost going out of business not too long ago. This could be the most interesting story of all of this, is that this might actually save some brands in the space. And then also, I think there's some real interesting effects and impacts because the job market has also really changed. One of the big challenges of hiring in California is that we're competing against all these tech companies with all this VC money, right, for talent. Well, if it's all if it's all on Zoom anyway, right, then the whole world becomes accessible, but also people in the Bay and in LA where the job situation is more difficult. Earlier stage companies without as much capital can start affording really top talent. So there's some silver linings in it as well.
Yeah, if I could also add that I think it's important for us not to, and whilst I understand the question, Jason, you're looking at California, I think it's important that we don't only stick at a micro level or even at a national level. I think it's also important to look at looking at the cannabis industry as three, possibly more different sectors. So we could look at, as Troy has just spoken to, what's happening there in the short-term play around dispensaries becoming recognized as essential services and all of the dynamic that's happening there. But we also should not take our eyes off medical cannabis and what's happening at a global level, different shifts and different governments that are moving ahead swiftly because they recognize that COVID or otherwise, there are some fantastic opportunities for medical cannabis. And then if we look at another very, very important and key sector is all things hemp. There are huge opportunities there for large agricultural firms, which will, I think, create a fluidity and a liquidity in markets, whether it's capital markets, whether it's private investment markets, family-owned markets, whatever. I think that we're going to see some real dynamism in the industry, and I think that's something we should get very excited about, because there are all sorts of dynamics going on at a geographic level, at a macro level too.
No, I think that's a good point to expand that out. I just thought the distribution point was somewhat interesting, just because I feel like there's a lot of dispersed sort of, especially in California, kind of distribution players, and nobody has sort of really taken control of the market yet. And so maybe COVID is going to accelerate sort of who ends up being the successful player in that sense. So moving on, we've kind of probably already touched on this a little bit, but in comparison to the last recession in 07, 09, and of course the cannabis industry was much different then. Do you see any sort of similarities and differences with sort of how COVID might affect what's going to happen this year, or the outlook over this year, even into next year, that anybody wants to touch on?
Yeah, I'll jump in, start with that. So, I think the similarities between the last recession and what we're seeing now, I think the big question mark around both of them. When we were in the last recession, the question was, how long was this going to last? And that's exactly where we are today. Is this going to be a 3-month problem or an 18-month problem? Our feeling is it's going to be a long-term problem. It's probably going to be a rolling problem where we might go out of quarantine, then have to go back in quarantine if there's a hotspot of COVID that breaks out. And I think the CDC has kind of said the same thing. That being said, I'm incredibly optimistic on how this industry is going to look after this. To Troy's point earlier, you have a number of states, at least 11 states, that have used the term essential services, and at least 18 states that are allowing cannabis to run right now and function as normal. I think that's incredibly powerful. It really goes to show what the pioneers of the industry have done in terms of getting cannabis to this space. And I think coming out of this, ultimately cannabis is going to be looked at on a national level as more of a normalized thing much more closer to beer and alcohol in general. And I think it really could push a lot of things on the federal level as well. So, you know, getting through this is one thing, but I think we're going to come out of this in a totally different industry with a totally different sentiment on a national level.
Totally agree, Michael. I think you got a good point on a number of different levels. I am communicating with our investors, and I know from past economic breakdowns, the people that did best financially were the people that, when this dust settles, they were ready to rock. They were ready to invest. They knew what to invest in. They knew that they had been reviewing the companies. They knew which ones were going to be sustainable, and they went into them early at a reduced valuation. And so I'm, you know, picking companies right now that I think are going to be teed up for just that activity for my investors. And I think the key here, you know, Anna submitted this question and I thought about it, and I thought about, you know, what is similar. And I remember going through past recession, it's about resourcefulness. It's about really getting innovative and resourceful and figuring out where are good partnerships, where are good synergies, how might you become even more efficient, and that forces you to kind of do this in this environment.
Yeah, I would also pick up on what Sherry and Michael have said, and I would agree. And to build on that further, and at the risk of so go full circle, actually we come back to California. One of the things that I really love about California, and the reason I've made it my home, is the innovation that's here. Not just in this sector, but in most other sectors. And I'd spent some time in the not-for-profit sector also, and I love the innovation that is here. And one of the things that I've found about Californians and generally Americans is that when their back's against the wall, great things happen. And that's one of the things that I saw in 2007, 8, 9 on the back of the financial crisis. And to some degree, I saw pockets of it in 2002, 2003 in Hong Kong when I was living and working there during SARS. So there were, I would say, resilience and agility. And I do think that those organizations that are future focused, they see these as externalities, severe or otherwise. They see them as exactly as that. They stay focused on the long-term play, and they're the ones that typically win through. They use the opportunity to develop and align all of their smart thinking around innovation. So they're looking down the line and say, what did we not have? What do we need? How do we close that gap? And then they move on it. And we're seeing now the same kind of California mentality happening in Singapore. We're seeing it happen in Hong Kong, in Jakarta, in Indonesia, and other parts of the world. And I see that as a massive upside. And so I don't worry too much, frankly. I'm worried on a day-to-day basis, but I'm a long-term thinker. So I guess that's why I work with Sustainable Development Goals. And so I'm very positive.
Thank you for that. So I think maybe a good segue into this and talking about agility and resilience is to sort of go into maybe the advice you're giving your portfolio companies or companies you're advising on sort of what you think is going to be like what their business plan should look like for at least this next year.
Yeah, I'm happy to do that.
Yeah. Okay.
Well, we primarily are looking at very early stage companies, probably much earlier than Michael is, I'm sure. And our criteria has gotten much tighter. Okay, where we might have looked at some developmental stage companies in the past, I want to see people now that have traction, that have a pipeline, that have a solid thesis that can back it up with a great team. I mean, we need to take it a little bit further than we have ever before in the past, and approach this as though there's a limited amount of money out there. Where is that money going to want to go? So you really have to be very committed and distinct in your differentiation.
And so I guess just one quick follow-up on that is, are you, still thinking about capital you're going to deploy this year, or are those strings very, very sort of tight? So companies can still, if they're meeting your criteria, definitely doors are open and not fully closed, at least for the short term.
Yes, it's just much more differentiated now. It's much tighter. It's much more controlled. We want to see not only stories, but I want to see numbers. You know, I want to see it.
Sounds
Yeah.
good.
Big advice is conserve cash every way that you can.
Mhm.
Now, I think for most companies, and then of course, you know, it's also a real opportunity too, right? So since a lot of investors aren't expecting, unless you're a delivery company, investors aren't expecting you to do phenomenally well right now. Right. So if there's an opportunity for a pivot, or if there was some opportunity that was sitting there, there can be some really interesting things can happen during these times where you get to kind of gather your team together and be like, okay, if we were to just start fresh today, what would we do? Right. And so there are some opportunities for that kind of reevaluation. And so I think that's for people to look at this as there's always opportunity in crisis, and to see if your team is actually better suited to solve this other much more sticky problem right now, right? There's a lot more new sticky problems. So if you've got, especially if you're a little earlier stage, you have the ability to be nimble, where the bigger folks don't have that ability. So use it at a time like this.
Yeah, and I think just to add to that too, a part of what we're looking at when we are looking across the industry, we're seeking companies that can clearly indicate that they have at a senior leadership level agility, resilience, and all of those other characteristics that will help that organization go the distance. And that sounds a little trite, perhaps, but part of the work that we do at the advisory end of our work is to help organizations develop and think through what we call their massive transformative purpose, MTP. And we utilize all sorts of techniques that come out of Singularity University and similar organizations, accelerated solutions, environments, etc. In essence, design sprints that help organizations think through, why are they existing? What is the purpose of this business that they are creating? And we are seeking to help them also understand what are the environmental impacts that they need to be thinking of as they develop their business, as well as social impacts. And some of the social impacts might be, for example, at a very high level, restorative justice. And you look at all of the work that people like Steve D'Angelo are doing at Last Prisoner Project. I mean, these are right on, using an Americanism, these are absolutely the types of social impact issues that we are looking for those companies to take on board head on and deliver their business aligned to those particular social issues, whether it's, again, veterans with cannabis, indigenous people's land rights, etc. And then on the environmental side, what are we doing about toxic water runoff? What are we doing about massive suck on energy because of growing cannabis in indoor environments and the like? So we're seeking those organizations that get that. They understand why that is a longer term play, and we believe then that the funding that comes from family offices and organizations that are seeking that, then there's a match that happens. So that's part of what we're asking organizations. We're asking, what is your purpose? Why are you even doing this? And we build on that.
Thank you. And I think sort of just to drill down on this point, like just a little bit more, are there any sort of specific money saving suggestions, at least in the short term, that you would give to your founders that are in your portfolio? So for example, I was on a call with one of my clients, the CEO of their company, and they actually raised a pretty sizable round at the end of 2019. So cash wise, they're sitting fairly comfortable, and they're seeing pretty good growth in this first quarter of this year. The CEO is still, fairly worried. Like, do we just keep putting a lot of resources, hiring more people, and try to capitalize on the growth we're seeing now? Or is COVID potentially going to crush that? And all of a sudden, we should have gone to more of a skeleton crew sooner and tried to sort of, really leveraged our as thin of resources as possible to maintain at least respectable growth so that we can look at raising again next year. I don't know sort of how to maybe
You know what,
balance that advice to founders who work with.
I'm talking to a company now that may be in a similar situation. Their cash flow is strong and their business model is strong. And they approached me recently to raise capital, and we've had a conversation about it. And what their team has decided is that they would rather go out now rather than waiting, so that they can pad the coffers in the event that, you know, any further bad news comes around, they're better prepared, they're better cushioned for it. So that's another approach.
We're telling our companies and taking again more of a bearish look at this whole thing. It's just such a big question mark. It's such a big unknown. What we've been talking with our companies about is you've got to get ahead of this. If this lasts longer than, or as long as some people expect it to be, it's going to be very hard to find capital. There's definitely investors in the space right now that are looking to allocate money into this, like today. It's not completely dried up. There's a lot of long-term investors. There's a lot of, you know, emerging market investors that understand these environments, though this one is hard to understand in comparison. But I think you've really got to button things up and be ready for the long haul with this one. And I think companies should have enough capital or be able to extend their capital by making some cutbacks to get you through 2020. Because I think this bear is going to take us into 2021, maybe not to the level that we're seeing right now, but it's going to be, there's going to be cycles of this. You know, we saw in early March a huge uptick in sales, which was great for the industry. It really said a lot of things as people were preparing for this and really showing us how much demand there is out there. That's not going to continue. We're already seeing sales normalize or tick down. I think a lot of it has to do with people who are just hoarding, and people are well stocked right now. But there's so many questions on a macroeconomic level about, you know, we're seeing 100,000 people file unemployment a day in California. You saw the unemployment numbers last week. This week, they're talking that they could hit 5 million. The discretionary income is going to be dropping for a lot of consumers out there. That concerns us a lot. From what everyone knows about this industry, we're concerned that consumers might turn to the black market to try to save 30 to 50% on their purchases, which frightens us. But there are a lot of question marks. And I would say, you know, our companies, we've told them push back on or hold back on some of the more aggressive expansion plans. Wait until you're out of this environment because we just don't know where it's going to lead to. And we might get to a point where capital is next to impossible to come by. I just don't know yet. So I think buttoning up things as much as possible and focusing on revenue generating operations is probably the most prudent thing to do right now.
I think we're also going to see companies that would otherwise not be in the M&A game get in the M&A game. So if, you know, companies got a little more capital than they thought they were going to have, there's going to be some real bargains for them to expand and to get rid of competitors. And so that would be another thing to look out for, depending on the cash position of the company.
Mm-hmm. And I would also say that it's from my Ernst & Young days. I was once upon a time at Ernst & Young, and for which I apologize. I recall one of the things that was always drummed into us when we were talking to business owners, that your belt should always be tight. In the sense that, you know, people would say, "Oh, times are tough, we should tighten our belt." As an investor, I was always looking at the belt always being tight when it came to leadership. And I think that's these sets of behaviors are things that you look for. You want to make sure that, you know, people are as business leaders, they're thinking all the while of them having tight fiduciary controls, management cost controls, etc. I think that's an essential part. But I also think that springing forward, you know, if you're a dispensary and you know that at some point we're going to come out of this, let's say we know that. One of the things that's going to happen is that the cost per square foot of property is really going to drop off at some point, because businesses will be falling over. And there's going to be a lot of property available. So the question then for dispensaries is to know when to actually pull the trigger on a deal. And so in that sense, they have an opportunity. It's a question of timing. And I would encourage any dispensary that has an idea around sort of developing through investment monies a broader group of dispensaries, California or otherwise, is to then have a very, very close look at the market dynamics around price per square foot of property and where that's going. And you might find that in actual fact, you can win big. And that's a question then of just being, having some foresight and some forecasting. It's just one small area of where I think there's an opportunity.
Thanks, Jeff. So from there, I think I wanted to touch on the remaining time we have before we go to questions on sort of the federal. I mean, we can even talk about California level and expand to federal level, but just sort of regulatory questions for this year and how COVID is going to change that. I know, Troy, you wanted to talk about sort of prospects for policy reform this year on the federal level. And I even think it might be interesting, just kind of piggybacking off of Michael's point regarding the black market, if we might see some local changes with respect to, for example, taxes in the California market, to the extent we do see a huge drop off in sales and people going back to the black market more than expected. I know I packed a lot in there, but sort of feel free.
Sure, I can tee it off here. So I really think that most of the things at the federal level are not going to happen, right now, right? Whether it's banking or safe access, safe banking or 280E reform or any of these things that are happening. Nothing's happening that's not related to COVID right now. And so that's going to get paused. Also, a lot of stuff that's happening at the state level is getting paused. We've got a lot of great projects. I mentioned I'm chair of the board at the Marijuana Policy Project, and we've just got so many great projects that in a lot of ways are on hold in a lot of places. That being said, it's the best opportunity we've ever had in the big scheme of things. When alcohol prohibition was repealed, it was repealed in part because the federal government really needed tax money, and the states really, really needed tax money. And so all the moralization that was in the way of it kind of went to the wayside because people were like, we got to get out of this mess. And I think that, up until now, we've really been pushing for, sort of a states' rights sort of approach to the federal law, which is like, just let's get them to just let states do what they want and legalize it that way. I have a feeling that coming out of this crisis, the federal government is going to want that money so bad that we may be able to push for actual federal legalization with a federal tax, like in no time, in part because it could be a big, big win for the federal government. And then you'd have interstate commerce, you'd have, international commerce, all the things. So I think that the things are shifting in a really, really powerful way because the need to legalize cannabis just shot through the roof, and any need to not do it also kind of just dropped off because everybody's just got bigger fish to fry, more important issues than to deal with stopping cannabis. You kidding me? They need money. Mm-hmm. So I think it's really, really going to change things.
I would just say you're absolutely spot on, Troy. I think you make excellent points. There will be a $2 to $6 trillion hole in the federal coffers on the back of this. They will want to find a way to fill that hole as quickly as possible. And I think that the SAFE Act and other federal matters around the legalization of cannabis will move super swiftly afterwards. So I think that's another aspect of what business owners need to be prepared for. I mean, if it doesn't happen, then plus ça change. But if it does happen, be prepared.
No, I agree, absolutely. Today I looked at a map of the southeastern states. There's a whole band that goes across the southeast that are all teed up right now to go legal. Of course, we know about Florida being, one of those, but everything above Florida, millions and millions of dollars approaching for revenue. So yeah, I agree. Once we get this out of the way, there's going to be a bombardment of companies and opportunities, just like Troy said, opportunities. And a lot of those are going to show up in many different forms. So I think it's going to be very strong. I think that it's a shame that this is happening, of course. It's horrible, but it is teeing up. I mean, the fact that we have become suddenly essential is a mind blower. If you think about, where we were not that long ago.
It's really a shame that I'm in agreement. I wouldn't put a dollar on anything happening on the federal level. And when you look at it and you look at what banking could do for us right now, and in terms of public health and safety, you're talking about having payment processing, where right now we're still a cash business. And a recent statistic that came out said COVID could live for 17 days on cash. And so, the industry is definitely leaning into the government to do something and making these points to them, but I just don't see them acting. And the other thing is, you have an industry that's up and running that needs financing. We need access to SBA loans. We need just access to capital in general, and we're employing people, and you would think that naturally the government would want to do something because we're employing people and we're generating tax revenue. But unfortunately, I just don't see anything getting done until after the fact, as Troy said.
Correct.
Thank you. Those are all really good insights. So we wanted to leave the last 10 minutes for any questions. Anna, did you want to pass those along, or if anybody has questions, feel free to put them in the Q&A room. Let's see what we have so far.
I think someone doesn't have their audio muted, so maybe among the attendees, can you make sure that you are muted? Okay, so I see a raised hand. Nathan, you can ask your question.
Okay, great. Can you hear me?
Yes.
Awesome. Thank you, everyone, for the insights. Really appreciate you sharing your thoughts. I just had a question for the panelists about how do you think of investing, and what are you looking for, let's say, through the lens of investing in a brand that is focused on hemp, given you can build a national shopper profile across all 50 states. It obviously doesn't have the regulations that THC has, and then having that brand sort of be able to onboard anything they potentially want later, like THC and other alternative wellness solutions coming down the pipeline, versus how do you focus in on looking at cannabis more specifically, or I guess where is that delineation? How do you look at investment with hemp versus cannabis or marijuana?
Brands are on hold for me.
Okay.
I would say with brands, the real challenge with brands is that there's so many of them, right? And so when you're at this phase of an industry, unless they've got a ton of traction and they've got some really unique product IP, not just brand IP, but product IP, then it's really just a really tough thing. Unless now, if you're a big distributor, or you've got some big access to distribution, those can be some real interesting differentiators. But a brand in of itself, I think, is really, really hard right now because it's so hard to pick the eventual winners, especially when we don't have interstate commerce. And certainly with hemp, it's different because you can do that. But you've got you're waiting for rules from the FDA. You've got an explosion of product, which is just all over the map. You don't have any clarity about what things do what and what they don't. You've got football players out there saying that CBD cures coronavirus and stuff like this. I mean, it's just mayhem out there. And so it's a really tough market to enter. God bless you, though. Go for it. I mean, someone's going to win that. I just think it's a really hard investment thesis right now.
Probably was my long answer.
Yeah, it's about getting shelf space. How are you going to get on shelves? Because there are so many brands out there, distribution. And then to the point about the FDA, what happens if you're a CBD hemp branded product company, you're making any type of edible products or beverages, and then the FDA comes out and says you can only do that in an FDA compliant facility. It's very hard to guess how those regulations are going to look. So it is a place that we're kind of staying away from until we have some more clarity.
I have nothing to add to those wise words.
I was also going to say that part of why I think there's so many brands is because people, when they get into the cannabis sector, that's like the easiest thing in their mind. It's sort of the easiest thing. I have a product idea, so let's do that. Or I want to start a dispensary, or I want to have a grow. But really, unless you're already a product maker or a farmer or a retail shop owner, right? You're getting into areas that are just totally not really where your likely skill set is. What I encourage people to do is to look at their existing skill sets, the businesses that they already know, and figure out, are there ways that their existing skill sets and their existing business can apply in the cannabis sector? That's where you're going to have an unfair advantage. That's where you're going to be able to bring talent and insight and solutions to an underserved industry. And you're also going to have less competition in most cases.
So although I said I had nothing to add, of course, let's look at this in a somewhat contrarian view. Let's just pause and forget about cannabis brands, but let's look at established brands, non-cannabis brands, household names that, let's say, in the agricultural world, let's look at what the opportunity might be for them to sink their teeth business-wise from an investor perspective into hemp. And that would be an interesting experience and an exercise to follow, to see how large established brands that have an interest in moving into the cannabis industry at a peripheral level, but perhaps over time becoming a major player. There's an interesting set of experiences that could be looked at there. So I wouldn't just sort of being contrarian and looking at it from an established brand perspective. The large agricultural and pharma companies also looking at medical cannabis too, which is, yes, I agree, it's not fully legalized, but increasingly so. So just a thought there.
Bastian, I have allowed you to talk and ask your question.
Yes, thank you. So this is Bastian Den Braber speaking. I'm looking at what's happening in the African continent right now, and I've seen that in companies in countries like Lesotho and South Africa, cultivation companies have seen investments from the UK, the US, and Canada at the rates of $60–70 million each. Zimbabwe just opened up their market for the legal growth of cannabis for medicinal purposes. What's your perspective on cultivation there for then export in high priced retail markets like Europe?
I can't really speak to that. And I think that our US investors right now have too many restrictions to even start thinking about that at the moment.
Well, I mean, Bastian, I think it is a great point. And again, it comes back to when we speak about this industry, we should just try not to speak of it from a national perspective here in the United States. And I don't mean that in any other way other than as an opportunity. And you're absolutely right. I think when you look at what's happening in Lesotho, in Zimbabwe, in Zambia, and generally speaking, those Southern African countries, there are huge opportunities for investments that are not restricted through geographic boundaries. And I think that at a national level here in the United States, there's a lot we can learn in terms of the investment flows. When we get to the point where it is fully federally legal here in the United States, it really may then open up some opportunities. So again, just having the foresight to think ahead, look ahead, see what scenarios are opening up we could for sure learn a lot of what's happening in places, as you've indicated, including Zambia and South Africa.
I would just add that I think that there's a race on for the low cost producers throughout the world, and when you have we do have some international trade right now, particularly to Europe, and eventually that'll come to the U.S. and other places as we open things up more. So it's a really long-term play. And right now it looks like the battle's going to be between Colombia and Mexico for the low-cost producer. But that's a low-cost producer in this hemisphere. There's going to need to be opportunities for low-cost producers in the other hemisphere as well. And so those I think are really interesting opportunities, but I think they're long-term opportunities. Whenever we hosted an event in Colombia, and I was so surprised at how just how early that market is. I mean, it's really, really early. The people that are investing there really need to have a long runway, because it's going to be a while because in Colombia, for example, the market internally is very, very small. It's got to be an export market. And so I don't know a lot about Lesotho and Zimbabwe and what's happening in those markets, but I suspect some of what I know about what's happening in Central and South America might be portable over there.
Good. Thank you.
Okay, I'm going to allow Marcus to talk. Okay.
Hi, good evening. Jeff, you mentioned integration of the UN social development goals into the cannabis space, and you talked about the environmental and social impacts of their operations. To you and to everyone else, how can companies best examine those impacts while remaining profitable, while keeping their businesses viable?
I'm often asked this question, and it's a great question to ask, because it really enables us to speak about the fact that making money and doing good are not mutually exclusive. And for anybody who thinks that they are mutually exclusive, then you're wrong. Quite just as simple as that. So one of the ways in which you can help an organization think through how they can deliver social impact and environmental impact whilst still making a profit, so what we call triple bottom line, or indeed what we call impact alpha, is utilizing software as a service, or indeed just rudimentary data gathering exercises within an organization that helps you identify what are your environmental, social, and governance factors that you need to capture in your day-to-day operations, whether you're at the growing end of the industry or the distribution end, or whatever it is you are in the value chain and the supply chain. By capturing this ESG data, environmental, social, governance data, and ensuring then that it's material to your business, it really then gives a window for investors to then see that you are delivering a social upside and environmental upside. And I don't honestly believe that you don't need to do that at the risk of losing profitability. Frankly, the converse is true. So I don't know if that helps answer that specific question. We go deeper.
It does. Thank you so much.
Okay, so I have a question from someone who couldn't join us today because he's in Moscow and it is 4 a.m. his local time. So his questions are: one, we have many talented engineers who create equipment, growing systems, lighting, fertilizers. They're working, I think that's lighting. They're working only for the Russian market, and they don't even think about the global market. We want to try to bring them and their products to the US market. What form of partnership is better to choose for this? And should we do a venture capital fund, or should we establish new companies with them? How? Maybe some kind of special partnership agreement in US jurisdiction. So that's what I've got for you guys.
Putin's okay. Jason, is that your area, Jason?
on coming to the U.S. and partner
Potential
with-
partnerships.
I mean, I think there's a lot of different ways you can structure it. That's like a super high level question. It depends on whether you're purely going to do it from I want to license my IP to somebody and let them kind of run with everything and just sit back and collect a simple royalty, or how involved you really want to be on the operations on the U.S. side, and it maybe looks more like a joint venture. So, and then you start getting into, from a regulatory perspective, how that might actually influence the structuring of the business transaction, and you get into tax issues and a whole other host of things. And just making international obviously just increases the complications of things as well. So it really depends on what exactly you're looking to achieve. I know that's not a very specific answer, but ultimately call a lawyer and then you can talk through everything.
I'm so sorry, guys. I do have a 7 o'clock I got to get to, so I got to run. This is wonderful to be here. Thank you for having me. Take care.
Thanks, Troy.
All right, I think that's all the questions. Was there anyone else who wanted to add to that answer?
I was just going to say, as a fire truck goes by here, sorry about that. I think the question is around what the technology is. Is it, is there IP there? And is it technology that producers in the US and North America and Europe haven't yet seen? Or is it, a new level of technology that we currently have? There's a lot of grow houses out there that are using cloud-based automation systems, climate control systems, then you get into LED lighting. So, for me as an investor, I would want to know, first what the technology is, if it's proprietary, and if it is a kind of a breakthrough technology for cultivation or whatever it's specifically for, and then based on that, trying to set up most likely a joint venture with a US firm.
All right, is there anyone else? Okay, so I think that concludes our panel. If people want to stick around, we will start the one-on-one virtual networking event. So all you have to do is look to the chat. We've included an extra link. It's a Meetaway link, as I mentioned at the beginning of this event. Make sure that you go ahead and click through one of those links. You have 5 minutes for registration, and then it will just kind of round robin match you with someone to start talking to. So yeah, thanks everyone, and everyone will see you guys there.
Thank you, Anna. It's been a pleasure. It's been fun. Bye-bye.
Yeah, thank you very much. Thanks for organizing.
Yep.
Thank you.
Thanks, everybody.